Welcome everyone to Application Video 1 for Audit and Assurance. My name is Mary and I'm one of the module leaders on the AAA program. This video forms part of a series of application videos which go through exam-style questions to prepare you for the exam. In this video, we'll be covering audit planning and risk assessment. As a prerequisite to watching this video, we expect that you have read through the background information on the wine store and have a copy of that to refer to as you watch this video. You will find a copy of the background information on the module landing page of My Learning. During the video, we'll often ask you to pause and think about questions on the topic we are covering. To get the most benefit from this video, we recommend that you follow the prompts and click pause and think through the answer before you move on to the next slide. This video is based on a practical example, something like you might see in an exam. The question we'll be working on will focus on identifying risks and determining the overall audit strategy. The approach we'll take in this video is based on us working through an exam-style question together. We'll understand what is being asked, revisit the content required to answer the question, and use questions and answers to help you with your understanding of this topic and to assist you with answering the question. Before we go any further, let's remind ourselves of the focus of today's video, the wine store. So you are an audit senior at the AAA audit firm. You've been assigned for the first time to the audit of the year-end financial statements of the wine store. You have been asked to assist to finalise the plan and overall audit strategy for the audit of the financial statements for the year ended 30 June 2023. So what are we being asked to do in relation to the wine store? We are required to A. Identify and explain the risks of material misstatement which would impact on the audit, and B. Determine the overall audit strategy that would be most appropriate for the audit of the wine store's financial statements for the year ended 30 June 2023, and to justify your response. This is a typical exam-style question. For the purposes of this video, we have highlighted each task word so that it can help you understand what would be expected in terms of an answer as an examiner would want to see. Let's go through a couple of the task words now, including the depth of the response required. Identify means to point to the essential part or parts of. Identify does not require a long explanation. Bullet points should suffice. On the other hand, explain means to make clear the details of something or show the reasons for or underlying cause of or the means by which something occurs. So here you would do more than if asked to identify. Remember that the definition of task words is in a document called Exam Tips and Techniques, which is in the exam section on the module landing page. Let's take a moment and recap on some audit concepts before we launch into answering the required question. So there are three stages of an audit. The risk assessment stage, where we fundamentally plan the audit. The risk response stage, where we design and perform audit procedures to obtain audit evidence. And the reporting stage, where we evaluate the audit evidence to form a conclusion, which is reported in the auditor's report. In this video, we'll look at the start of the audit process, that is, planning the audit. This is also considered to be the risk assessment stage. Subsequent videos will focus on the other stages of the audit process. The risk assessment stage is fundamental to ensure the auditor appropriately plans the most effective and efficient audit. Obtaining an understanding of the risks which may result in a material misstatement is critical to the auditor so they can determine what procedures to perform as part of the audit. There are three key activities which form part of the risk assessment stage. At a high level, these include performing preliminary engagement activities, performing risk assessment, and developing an overall audit strategy. So let's now apply the three activities of the risk assessment stage to the audit of the wine store. The first activity is to perform preliminary engagement activities. This is where the auditor decides whether to accept or continue the engagement. For the wine store audit, the background information states that AAA have been the auditors for a number of years. Therefore, we will need to determine whether we should continue with this engagement. We'll be working on the basis that the audit manager has already assessed independence and agreed the terms of the audit in an audit engagement letter, which is a key part of the pre-engagement activities. The second activity in the risk assessment stage is to perform a risk assessment. This is where the auditor identifies what the risks of material misstatement may be in the financial statements by understanding the entity and its environment, business and fraud risks, and design implementation of controls. Over to you. An auditor obtains an understanding of the entity and its environment by looking at what? Click pause and see if you can come up with at least 3 suggestions. And when you have your answer, click play. An auditor obtains an understanding of the entity and its environment by looking at industry, regulatory, and other external factors, the nature of the entity, including its operations and structure, objectives and strategies of the organisation, its accounting policies, and its internal controls. So how did you go? Remember, these are only 5, just to name a few. So let's now consider how AAA would obtain an understanding of the wine store. AAA would want to do some research on the organisation and have discussions with the client. But this isn't the first year that AAA is the auditor of the wine store's general purpose financial statements, so they should have some understanding of the wine store already. Where did AAA obtain information on the wine store from? Click pause, think about all the information that you know to date, and when you have your answer, click play. The background information provides relevant information on the wine store, which we have obtained from their previous audit experience with the wine store, a review of the prior year audit file, they have been their auditors for a number of years, researching the internet and reading newspapers, the initial audit planning meeting with the client, which revealed interesting information from the senior wine buyer's assistant. Now here's a tip. When answering an exam question, always consider all the information you have been provided with. Don't provide generic answers. Consider all the facts in the question which may impact your answer. As you can see, this information that we have listed on the screen comes from the background information that you have been provided with. This leads us perfectly into considering Part A of the required. Identify and explain the risks of material misstatement which would impact on the audit. Considering your understanding of the wine store and the industry it operates in, can you identify a risk of material misstatement which would impact on the audit plan? Remember, when you're trying to identify the risks of material misstatement, think back to your understanding of the entity and the industry that you obtained from discussions with the client, the information sourced from media, and previous audits. Click pause and see if you can come up with at least 2 suggestions. And when you have an answer, click play. So 5 risks of material misstatement that come to mind with respect to the wine store are the risk of fraud in relation to the buying Italian supplier, the renegotiations with the bank, the growth of internet sales, history of recurring stock take errors, media reports on penalty rates. How did you go? Remember, this is not a complete list. You may have other valid responses. Remember that our required is to identify and explain. So, of the 5 risks of material misstatements we have just identified, we now need to explain why they are a risk of material misstatement. Let's start with the risk of fraud in relation to the buyer and Italian supplier. The possibility of fraud would increase the risk of there being a material misstatement in the financial statements. With respect to the renegotiations with the bank have yet to be finalised, and it is possible that the wine store may not have access to the funds it needs to expand. If it does get access, there may be additional requirements it needs to meet, for example, loan covenants. These considerations would increase the risk of there being a material misstatement. In relation to the growth of internet sales, there is a significant shift in the makeup of the business. This change in the way transactions are undertaken could increase the risk of material misstatement. With respect to the history of stocktake errors, inventory is a material balance. As there have been stocktake errors in the past, this could increase the risk of material misstatement in the inventory balance. And finally, in relation to the media reports on penalty rates, media reports suggest that junior sales staff had not been paid the penalty rates they are entitled to when they work Sundays or public holidays. This could increase the risk of material misstatement, particularly in relation to the understatement of employee entitlements. Well done! You've now completed Part A of the required. Remember, when performing a risk assessment, we need to consider the risk of material misstatement, which comprises of 2 components: inherent risk and control risk. So of the 5 risks of material misstatement we have just identified for the wine store, which would be considered an inherent risk or a control risk? Click pause and determine which risks are inherent risks or control risks. And when you have your answer, click play. Okay, then let's start with the inherent risks for the wine store. Here they are. What you should also note when you're looking at these risks is that the first 2 are pervasive risks or risk at the financial statement level. That means they need to be addressed through an overall response by doing things like changing up the level of staffing, like using more experienced team members or involved specialists, adjusting the level of supervision with more involvement from senior team members, finding ways to make the audit more unpredictable. In contrast, the risk around the growth of internet sales is not a pervasive risk, as it's isolated to the sales account, which is a risk at the assertion level. That means this risk needs to be addressed using further audit procedures specific to sales. With respect to control risks, I'm sure you've worked it out now. The last 2 would be considered to be a control risk. As in both instances, the internal control system does not detect or prevent such errors from occurring. Remember, when we look at risks, we need to consider factors at the entity level and process assertion level. With respect to control risks, factors at the entity level can help address those risks at the financial statements level. These are also the foundation for control activities at the process and assertion level. Absent of any other factors, my overall risk assessment of the control environment is low here for the wine store, since most of these factors indicate an effective control environment. That means we can expect that controls will be operating effectively. We also need to consider what we know in terms of control activities at the process or assertion level at the wine store. Based on these 2 factors, we'll need to keep these things in mind when we're designing procedures around inventory and payroll expenses. Well, it's time for me to pause and just check in with you. This may be the appropriate time to take a break before we move on to Part B of the required. Click pause and take a break, or continue. It's totally up to you. We're now going to look at the third activity in the risk assessment stage, which is develop an overall audit strategy. The focus in this application video 1 is on developing an overall audit strategy for the engagement. As part of the planning stage, we also need to determine materiality. The concept of materiality won't be discussed in this video, it will be covered in application video 2. Okay, your turn again. What should be considered when determining the most appropriate audit strategy? Click pause while you think about this, then press play to continue. If you answered inherit and control risk, you're correct. As we have discussed, these establish the risk of material misstatement. Remember that the audit risk model highlights two important things. The first is that our starting point is always the risk of material misstatement, which is the output from our risk assessment process. The second is when you're talking about an auditor responding to risk, we're really just focused on detection risk, which is the only thing the auditor can control through the audit strategy and the audit approach, which are then used to develop the appropriate audit procedures. If we get this part wrong, we're in trouble. Without appropriate audit procedures, an auditor will not be able to obtain sufficient appropriate audit evidence and therefore form an appropriate opinion. So we've considered the risks of material misstatement. Now, what are the options in terms of an audit strategy? Well, we've got some different types of audit procedures. So we can obtain evidence about the effective operation of controls, reducing the risk of material misstatement. We can also use substantive procedures to obtain evidence through a combination of substantive analytical procedures and/or tests of details. This is our toolbox. So it's up to us to decide which tools to use for each client to tackle the risks of material misstatement. This leads us nicely into answering part B of the required. Determine the overall audit strategy that would be most appropriate for the audit of the wine store's financial statements for the year ended 30 June 20X3. Justify your response. Over to you. What audit strategy should AAA take for the wine store audit? Click pause and think about which approach would provide you with the evidence you need. Done? Okay. In this case, a mix of tests of controls and substantive testing, also known as a combined approach, would be the most appropriate. But why? Why is this the most appropriate? It's very important that we don't forget that we've also got to justify our determination, as in the required question. So here it is. In this scenario, we've determined that the control environment is effective. When this is the case, we can test controls and expect those controls to be operating effectively. As a result, we can reduce the amount of substantive testing we need to do in order to lower detection risk. Generally, this will result in a more efficient audit approach compared to a fully substantive audit approach. Another important thing to note here is that ISA 330 requires at least some substantive procedures to be performed. This means we can never do just control testing. Great work. You've now answered the question. I definitely think it's time for a glass of wine from the wine store. The key takeouts from today's application video are: don't ignore pre-engagement activities just because it's one of the early units. Don't forget the ethical requirements, even though they are not covered by the auditing standards and they weren't specifically addressed in this video, they are still very important. Risks come from many sources. Consider how business risk can impact on the financial statements. Don't ignore the potential for fraud. Prior experience with the client shouldn't be ignored in the risk assessment phase. When determining the risk of material misstatement, consider inherent risk and control risk, both which will impact the overall audit strategy. If you have any further questions regarding this video, please post them on the discussion board. Thank you for watching this video. We wish you all the very best in your studies.